TheoTrade. This is Don Kaufman. It's July 3rd, 2019, and you are watching the TheoTrade evening video. It's a half a trading session, but people, we hit it. We hit the big marker. You're on it right now. There it is, 3,000 on the button inside of the S&P futures. The S&P futures, I mean, they were just charging to the upside, literally to close right in and around that 3,000 level. I have to say, for a half trading session, volume ain't half bad. 758,000 contracts, which actually brings me to my next point. Hey, listen, you might be taking a few days off here, right? July 4th, it's a half a trading session today, July 3rd. You better get back in your seat on July 5th in the morning, because when the employment situation comes out, could absolutely rock markets. I'm going to tell you, the bond market is just, there's nothing that is standing in the way of this bond market. And what is absolutely just unheard of, look at the volume that's being done in the bond market today. I mean, that's really what we're talking about on this evening's video. Everything that's going on in the markets in general, in financial markets, it is all about interest rates. That's it. It's all about interest rates. The entire financial marketplace, it's all about central banks. And the point that I'm trying to make over here is, I mean, come on, it's a holiday trading session today. And the bonds, this is the ZB, it traded almost as much volume as the previous day. I mean, this looks like any other trading day. They have half a trading day. These things were absolutely rocking. And rocking to the upside once again. And one of the most surprising things to me is, as these bonds rock to the upside, obviously, okay, inversely, the interest rate associated is going down. And it's not, it is not impeding upon the financials. The financials kind of had this breakout day last week, kind of a little bit of follow through right now to the upside. But if I scroll down the screen, you start looking, Bank of America did actually close down on the day, all right? Then you actually have JP Morgan, okay, down ever so slightly on the day. Citi, generally speaking, flat on the trading session. Now, I do have to make the distinction. I am carrying positions in Bank of America. I am carrying positions in JP Morgan. I am carrying positions inside of Citi. All three of those positions happen to, in effect, be bearish positions right now. And they've also got earnings coming up right around the corner. But the point of me saying this is, again, what is impeding upon this market? And the answer is absolutely nothing right now is impeding upon the marketplace. Simply, it looks like the race to zero when it comes to interest rates. But again, I'm going to talk about interest rates here momentarily. Before I get there, I want to keep it short. We're going to keep it sweet tonight. I want to bring to your attention the SPX. As I said earlier this week and on the weekend video, there's a pretty expansive move here in the SPX, and I'm just going to highlight that move. This was right around $52 in change. That's $52 higher, $52 lower. We're there. We're there. And one of the things that surprised me, there's only 3.5 trading days this week. We already hit the edge of the expected move, which is just, again, just shy of that 3,000 marker, specifically inside of the SPX. You have to realize that in effect, we closed on the edge of expected. Again, we closed on the edge of expected, which is roughly that 29.95. Now, as I was kind of elaborating a moment ago, it's all about interest rates, right? It's all about what the bond market, what central banks are doing. The ECB, by the way, here's the SPX, and you can see the SPX. Right? Is that close enough for you? Close literally on the edge of the expected move. The interest rates, and we'll deviate back over to interest rates for just a moment, okay, all over the world are, you know, I was kind of joking about this, and I say it's the race to zero. First of all, the data provided below over here, put together by none other than a company called TradeTrade. This is actually last night's data. First, I'll start with the UK. The UK 10-year. The 10 years are paying 73 basis points. Now, if you break out, like a lot of people aren't necessarily looking at basis points, I'm actually going to cruise over what's called the TNX. This is our 10-year, okay? And our 10-year basically is at 1.953, right? So 1.9% on the 10-year. That's the equivalent, though, of about 195 basis points. The UK, the 10-year is only 73 basis points. It's crazy, right? You know, we're talking almost like what, 1/3 of what our 10-year is. The Japanese year yield right now, -14, -14. So the race to zero, yeah, the race to zero doesn't do you much justice when you've actually got what? Negative yield. In Japan, the French just went what? Negative yield. An absolute record low. They went negative in France on the 10-year. It gets better. The German, okay, the German Bund, -37. You have to recognize that, you know, most of these first world countries, they have gone into negative yield in just, again, the last few months. Everything is shifting. And again, here's our close roughly today. And I just rounded this. We're basically closing at about 194 basis points, which again, you know, you think about the rates here in the U.S. and you're like, oh man, they are low. And then you start looking at the rest of the free world and you realize, hey, wait a second. Maybe these rates aren't that low. When you start to look at the ZB, okay, which is the 30-year, and its climb. I mean, the interest rate associated with the 10-year, again, shockingly low at 1.9. But what I really wanted to show you in this case is, let's just look at the max data available. It's the race effectively to zero. So to think that rates are low right now, hey, quite possibly, you ain't seen nothing yet. Now, there's some very unique trades that I'm going to be talking about on Friday within the TheoTrade chat room involving specifically the TLT. We're actually going to take a couple of kind of interest rate and bond positions over here. These are trades that you are not going to want to miss. I hope everybody has a wonderful 4th of July holiday. We're going to be back in the saddle, okay, bright and early on Friday morning. Listen, I'm on Pacific time, 5:30 in the morning, the employment situation. I mean, most of the time you wouldn't think that much of the employment situation, right? Unless, of course, you're on the edge of the expected move. I mean, literally on the edge of the expected move. And yet we still, okay, between now and July 5th, we still have $16 of movement priced into this SPX. Thanks, everybody, for joining us here at TheoTrade. Have a wonderful holiday.